Here is a detailed summary of Alibaba Group's BBA June quarter 2025 earnings call transcript, designed for reading aloud. Introduction. Good day, everyone. Welcome to Alibaba Group's June quarter 2025 earnings conference call. Today, we have with us Chairman Tsai, CEO Eddie Wu, CFO Toby Su, and CEO of Alibaba E-commerce Business Group Jiang Fan. This call is being webcast, and a replay will be available on our website. Safe Harbor and Financial Measures. Please note that our discussion today may contain forward-looking statements subject to risks and uncertainties. For a detailed understanding, please refer to our press release and investor presentation. We will also be discussing certain non-GAAP financial measures, with reconciliations available in our earnings press release. CEO Eddie Wu's opening remarks highlights and growth. Hello, everybody, and welcome to this quarter's earnings call. This quarter, we delivered solid growth. Excluding revenue from Sun Art and In Time, our total revenue on a like-for-like basis grew 10% year-over-year. Our core businesses also showed strong performance. Customer management revenue from our China e-commerce business rose 10% year-over-year. A significant highlight is the Cloud Intelligence Group, which saw revenue growth accelerate to 26% year-over-year. Notably, AI-related product revenue has maintained triple-digit growth for the 8th consecutive quarter. Revenue from our AI development and cloud business, AIDC, grew by 19% year-over-year. In AI Plus Cloud, external customer revenue increased by 26%, with AI-related revenue now accounting for over 20% of this. We've also formed a strategic partnership with SAP, making Alibaba Cloud their global cloud computing partner and supporting SAP customers in running core software systems on our platform. This signifies a strong recognition of our cloud infrastructure and AI capabilities by global enterprises. CEO Eddie Wu's opening remarks: AI advancements and strategic initiatives. We've continued to advance our AI foundation model, Qwen 3, with upgraded versions and notable performance in reasoning and coding, particularly in overseas markets. We've also open-source models like our video generation model, 2.2, empowering customers to develop their own AI applications. Our AI-native applications are also seeing major advancements. MAP has launched MAP 2025, the world's first AI-native location-based application, positioning it as a new gateway for future lifestyle services. DingTalk has also completed its latest AI upgrade, introducing agent-driven work feeds. On our Taobao platform, we're seeing immense AI-powered opportunities in search and advertising. To enhance our consumer offerings, we've strategically combined Taobao and Tmall Group, ele.me, and Fliggy into the Alibaba China e-commerce group. This creates a comprehensive consumption platform and upgrades our consumer experience by consolidating supply chains, user bases, and membership benefits, including a new tiered loyalty program. Our investments in quick commerce have rapidly surpassed key milestones, contributing to a 25% increase in monthly active consumers on the Taobao app in August. Daily order volume for our China e-commerce group continues to set new records. Looking ahead, Alibaba Group has two historic opportunities: building a technology platform centered on AI Plus Cloud and creating a comprehensive shopping and daily life services consumption platform. We will invest significantly to capture these. This marks a new entrepreneurial chapter for the company. We've announced an investment of 380 billion renminbi over the next 3 years for cloud and AI infrastructure, and 50 billion renminbi for consumption. Our AI investments are yielding tangible results, evidenced by Alibaba Cloud's return to rapid growth driven by AI demand and AI-enhanced experiences. We are well-positioned in China, the world's largest e-commerce market, with a well-developed infrastructure and strong demand for services. Our quick commerce integration aims to fulfill consumer needs for a one-stop experience, enhance commerce efficiency, and pave the way for an all-in-one AI assistant for consumption. Our long-term goal is to create a comprehensive consumption platform catering to our 1 billion consumers' full spectrum of needs, leading in a 30 trillion renminbi addressable market. CFO Toby Su's financial overview and segment results. Thank you, Eddie. As Eddie said, we are embarking on a new chapter of entrepreneurship by investing in two strategic pillars: consumption and AI plus cloud. These represent the two biggest long-term opportunities we are systematically pursuing. To reflect this sharpened focus, we have adjusted our financial reporting. Starting this quarter, the combination of Taobao and Tmall Group, ele.me, and Fliggy into the Alibaba China e-commerce group transforms our value proposition into a comprehensive consumption platform. This quarter, total revenue was 247.7 billion renminbi. Excluding Sun Art and In Time, revenue on a like-for-like basis grew by 10% year-over-year. Adjusted EBITDA decreased 14%, primarily due to our strategic focus on scaling quick commerce, partly offset by margin improvements in AIDC and other units. GAAP net income increased 76%, mainly due to mark-to-market changes and gains from disposals. Operating cash flow was 20.7 billion renminbi, and free cash flow was an outflow of 18.8 billion renminbi, primarily due to accelerated capex for AI plus cloud infrastructure, approximately 39 billion renminbi, and investment in Taobao Instant Commerce. We maintain a healthy balance sheet and ample flexibility for strategic investments. This quarter, we bought back approximately 7 million ADSs for $815 million, demonstrating our commitment to shareholder returns. Looking at segment results, Alibaba China e-commerce group revenue was 140.1 billion renminbi, an increase of 10%. Customer management revenue increased by 10%, driven by take rate improvement, fueled by the June 18 shopping festival and a double-digit increase in 88 VIP members, now surpassing 53 million. Quick commerce revenue increased 12%. Adjusted EBITDA for this group decreased by 21%, excluding quick commerce investments. EBITDA grew year-over-year. AIDC revenue grew 19%, primarily driven by cross-border businesses. AIDC's adjusted EBITDA loss narrowed significantly, approaching break-even. Cloud segment revenue grew 26%, driven by public cloud and accelerated AI demand. The adjusted EBITDA margin remained stable at 8.8%. We will continue to invest in customer growth and innovation. All other segments' revenue decreased by 28% due to disposals. Adjusted EBITDA was a loss of 1.4 billion renminbi, primarily due to increased investment in technology businesses. In closing, this quarter marked meaningful progress in our strategic investments in our comprehensive consumption platform and AI plus cloud infrastructure. We are investing with clarity and conviction on the two historic opportunities ahead: AI and domestic consumption. Q&A key takeaways: quick commerce vision and investment. The company views quick commerce as a critical component of its comprehensive consumption platform, aiming to meet one-stop consumption needs for its 1 billion consumers. They see it driving significant incremental GMV and boosting Taobao app's daily active users and frequency of purchases. The heavy investment is expected to continue, with a focus on improving operating efficiency and unit economics as scale increases. They anticipate quick commerce will contribute positively to the overall e-commerce business, not just through direct profitability, but also via increased traffic and advertising revenue. Investments in quick commerce are part of a broader 50 billion renminbi consumption investment plan. Alibaba Cloud Acceleration and Outlook. The 26% revenue growth in cloud is driven by strong AI demand, including inference, training, and emerging opportunities in proprietary model training. They expect this acceleration to continue as AI adoption grows across various industries. While mindful of global peers, their focus in China is on offering a full stack of cloud and AI capabilities. They remain committed to the 380 billion renminbi 3-year investment plan for cloud and AI infrastructure, with contingency plans for supply chain challenges. In-store local services. The company sees synergy opportunities in the in-store part of local services, particularly with their quick commerce users who may opt for self-pickup or group purchases. They are testing and piloting initiatives to provide more diverse services to these offline shoppers. Commerce investments beyond quick commerce. Beyond quick commerce, investments will continue in user acquisition and supply chain enhancements across Taobao, Tmall, and Freshippo. The pace of these investments will be adjusted based on market conditions. CMR growth drivers. Customer management revenue, CMR, growth is driven by a higher take rate, specifically from the 0.6% software service fee, and deeper penetration of QZT, AI-driven. Quick commerce is also expected to contribute positively to CMR through increased user growth and frequency. Rapid CMR growth is anticipated in the coming quarters. Agent-centered AI and infrastructure. The company is transitioning from basic chatbots to advanced AI agents that require larger context windows, tool utilization, and integration with internal systems. This presents opportunities for Alibaba Cloud as an infrastructure provider offering virtual servers, sandbox environments, agent bay, and mobile virtual machines. Coding capabilities are crucial for these agents to integrate with tools and enterprise systems. Quick commerce strategy evolution. The current approach to quick commerce is different from past attempts with ele.me. The key differentiator is the integration with the Taobao app, leveraging its vast user base, coupled with a strong merchant network and established logistics. The focus is now on the holistic positive impact on the e-commerce business rather than viewing quick commerce as a standalone entity. Capital allocation and return on invested capital, ROIC. The company is prioritizing seizing two historic opportunities, AI and consumption. They have sufficient resources for substantial investments in both. While AI and cloud offer a larger TAM and faster growth, they view the transformation of consumption into instant commerce as a crucial opportunity. The focus is on making these strategic investments to drive growth, rather than solely prioritizing short-term profit rates. They believe that while current quick commerce investments are not immediately profitable, the integration will lead to increased traffic and advertising revenue, contributing to good long-term returns. The balance between short-term and long-term returns is key, and they are focused on achieving long-term gains. Lowlight/risk factors identified or implied. Adjusted EBITDA decrease. The 14% decrease in adjusted EBITDA, attributed to strategic scaling of quick commerce, indicates near-term profitability pressure in that segment. Free cash flow outflow. A significant free cash flow outflow of 18.8 billion renminbi due to accelerated capex highlights the substantial capital deployment for future growth. Quick commerce losses. While efforts are being made to reduce losses by half, the quick commerce business is currently incurring losses. Competitive landscape. The mention of ele.me not surpassing Meituan in the past suggests intense competition in the local services market, requiring careful strategy and execution. Market conditions and supply chain. Management acknowledges potential fluctuations in capex due to supply chain conditions and AI chip policies, indicating reliance on external factors. Future forecast/guidance. While specific quantitative guidance for future quarters was not provided, the management expressed strong confidence in continued revenue growth, expecting continued strong growth in core businesses, particularly cloud and e-commerce. Accelerated cloud growth. anticipating sustained acceleration in cloud revenue due to ongoing AI demand. CMR growth, projecting rapid growth in CMR driven by take rate improvements and quick commerce integration. Reduce quick commerce losses, aiming to have losses in the quick commerce business while continuing consumer benefit investments. Strategic investment pace, committing to significant investments in AI plus cloud, 380 billion renminbi over 3 years, and consumption, 50 billion renminbi, with the pace adjusted based on market conditions. Closing. Thank you, everyone, for joining us today. We appreciate your time, and we look forward to speaking with you again soon.